Welcome back to TalkTickers, everybody. The podcast where we like to really get into the nitty-gritty of these earnings calls and try to pull out some of the good stuff for you, the investors out there.
Yeah, absolutely. You know, we got to cut through all the fluff sometimes in these things. So much going on.
Oh, there's a ton going on. And that's definitely the case with the one we're talking about today, which is 3D Systems. So their ticker symbol DDD, their Q4 2024 earnings call. And, you know, the market definitely took notice, right? Because that stock price took a pretty substantial hit. I think, what was it, over 20% just on that day?
Yeah, I think it was right around 21%. I mean, a huge drop like that.
Yeah.
You know, obviously raising some red flags. We need to understand, like, okay, what exactly spooked investors that much, right?
Yeah, and that's what we're here to do, right? To like figure out what's the story here. Like, is this a buying opportunity? Is this, you know, something we need to be running away from? So we'll start, as always, by kind of looking at the high-level overview of, you know, how do they actually perform financially, and then we'll dive into some of the more, you know, meaty parts of it, the different segments, the strategic initiatives, and their outlook for the future.
Sounds good. Yeah, let's break it down.
All right, so starting with that snapshot of their fourth quarter, revenue came in at $111 million, which is a 3% decrease compared to the same time last year. And I think the thing that jumped out right away was that a big chunk of that dip, like $9 million worth, was because of how they're accounting for their regenerative medicine program, which we'll definitely get into more detail on later.
Right. Yeah, a $9 million swing, like that's definitely something you have to pay attention to.
For sure. And then for the full year, their revenue was $440 million, so down 10% year over year. And they basically said, look, that's the overall macroeconomic environment. It's putting pressure on those printer sales, which, you know, makes sense. But it is important to note that they still landed within the range that they had told everybody to expect, even with this accounting curveball.
Okay. So even with that adjustment, they still hit their guidance. That's a good sign, at least.
Right. It suggests that, you know, maybe the core business isn't in as much trouble as that initial stock drop might make you think.
Right.
Now let's look at the profitability side of things. So their non-GAAP gross margin for Q4 was 31.3%, and that's quite a bit lower than the 39.8% from the year before. And you guessed it, that accounting change is the main reason. But if you back that out, their Q4 gross margin would have been closer to 36.3%, and the full year would have been about 38.7%. So still down year over year, but it just goes to show how much of an impact that one accounting item had.
Yeah, that's a big difference. And, you know, it makes you wonder how much of that margin pressure is, you know, actually from the business itself versus this one-time thing.
Absolutely. And then on the operating expense side, non-GAAP operating expenses in Q4 were $58.4 million, and they actually highlighted this as an improvement from both the previous quarter and the same quarter last year.
Okay, so they're keeping expenses in check. That's a positive.
Yeah, and a full year, these expenses came in at $250 million, which is just a little bit higher than the $246 million in 2023, so pretty flat.
Okay.
Then let's look at the bottom line. Adjusted EBITDA for Q4 was negative $19.1 million, and that compares to a negative $5 million in the same period of 2023.
Okay, that's definitely heading in the wrong direction.
Yeah, and for the full year, adjusted EBITDA was negative $66.4 million, which is down from negative $26.4 million the year before. So yeah, not great. But again, this accounting change seems to be a big part of the story here.
So that's what we need to dig into, like what is going on with this regenerative medicine program and why did they have to change their accounting for it?
Yeah, exactly. Okay, so we need to understand this regenerative medicine program and this $9 million adjustment, right? So apparently it all comes down to the way they define technical acceptance for this program, particularly for their partnership with United Therapeutics on developing 3D printed human lungs. They changed how they measure that, and bam, that's where that $9 million adjustment comes from.
So it's not like the lungs themselves failed or something. It's just they changed how they're measuring progress. That's interesting.
Yeah, and they said the reason they made this change is because they're starting to use a new testing method called in vivo human decedent testing, and this method's been pretty successful in kidney transplants. The idea is it gives them better data earlier on about how well these lungs are functioning and how the body reacts to them.
And so it's like a more rigorous, a more accurate test, and that's why they had to adjust everything.
Exactly, and they were very clear that they still expect to recognize that $9 million in revenue in the future, once they meet those new criteria, it's not gone, it's just delayed. And, you know, they specifically said that even with this adjustment, their core business still met the revenue guidance for the year. So that was a big point they wanted to make.
Right. So the core business is doing okay, even with this little hiccup in the lung department. That's good to hear.
Yeah. So moving on to how their different segments performed in 2024, it looks like their industrial solutions segment actually had a pretty good Q4 with revenue up 11% to $71 million. And they said that was mainly due to strong sales of new printer systems and services, particularly in aerospace and defense.
Okay, so those are some pretty high-tech areas. That's interesting to see them doing well there.
Right. It suggests their technology is being used in some pretty demanding industries that maybe aren't as sensitive to these short-term economic ups and downs.
Makes sense.
But on the other hand, their healthcare solutions revenue came in at $40 million for Q4, and that's a 21% drop year over year. So not so good there.
Yeah, what happened there?
Well, they did mention the accounting change affecting that, but they also talked about some softness in printer sales in this segment and some inventory management happening with their dental customers. So maybe a little bit of weakness in that market right now.
Okay, so some mixed signals there. Something to keep an eye on for sure.
Absolutely. Now, something interesting is that their consumable sales were basically flat for the whole year. And they said this points to increased utilization of their printers that are already out there. So people are using the machines they already have, which is good.
Yeah. That's a positive sign.
And one area where they did see some really good growth in healthcare was in materials for dental orthodontics. That area grew over 30% in 2024, so they're definitely strong in the aligner market.
Right, so they're doing well in aligners and people are using the printers more. That's good.
Yeah, and they also highlighted strong customer engagement in developing production applications with their application innovation group, seeing an 18% increase in activity. So they're working closely with customers to come up with new ways to use their technology in production environments.
Okay, so they're not just selling printers. They're actually working with companies to figure out how to use them effectively. That's smart.
Right, and they talked about some big collaborations like one with Daimler Truck for spare part fulfillment, and another with Precision Resources for making metal components in those high reliability industries. So these are real world examples of how their technology is being used.
Interesting. So they're getting some big names on board. That's a good sign.
Now let's get into their strategy for the dental market. They see a huge opportunity there, like $1 billion market specifically for 3D printing companies, and they're going after it in four main areas: straightening, which is mostly aligners protecting like night guards, repairing things like crowns and bridges, and replacing, which is mainly dentures.
Okay, so they've got a pretty comprehensive approach to the dental market, it seems.
And they're very bullish on these numbers. By 2029, they're estimating the addressable market for straightening at $125 million, protecting at $150 million, repairing also at $150 million. And get this, they think the market for replacing with dentures could be a whopping $600 million. So that's clearly where they see the biggest potential for growth.
Wow. Yeah, that's a big number.
It is. And they highlighted their leadership in the aligner market. They even have a major contract worth $250 million over 5 years. And they're running over 600 production printers just for this one customer. So they're already a big player there.
Yeah, it sounds like they're really dominating that aligner market.
Right. And then they also talked about how well positioned they are in the denture market, which is growing really fast. They received FDA 510K clearance for their monolithic multi-material jetted dentures, which means they can print a whole denture in one piece with different materials, which is pretty cool. And they're planning to release a new printer specifically for denture production this summer.
They're really going all in on dentures, huh?
Yeah, they see it as a huge opportunity, and they said their competitive advantages here are their long history in the aligner market, the quality of their materials, their experience in making custom solutions for patients, and their track record with the FDA. They've got over 100 FDA cleared and CE marked devices, so they're not new to this.
Yeah, that experience and that regulatory track record definitely gives them a leg up.
Now let's talk about innovation. They said that even with the tough economic conditions, they still launched a bunch of new printers, materials, and software in 2024, including the NextDent 300 printer, which is designed for making night guards, and those jetted dentures we talked about.
So they're still investing in R&D even when things are tough. That's important.
And they also teased a new solution called the Figure 4 135, which they claim can really lower costs and speed up production for a lot of polymer parts, including electrical connectors, which is a massive market. They think that market's worth about $90 billion.
Wow, that's huge. So they're not just focused on healthcare. They're going after a big chunk of the industrial market, too.
Yeah, they want to be a major player across the board.
Ambitious.
Now, of course, everyone wants to know what they're doing to cut costs, especially after that stock drop, and they have a plan. They're aiming to save over $50 million annually by mid-2026 through a mix of higher gross margins and lower operating expenses.
Okay, so that's a pretty significant cost-cutting target.
Yeah, they're serious about this. They even created a special transformation office to oversee all these efforts.
Wow, so they're really putting some weight behind this.
Right. They've already taken some steps. They closed 4 sites and reduced their headcount globally in Q1 of 2025, which they expect will save about $5 million per year. And they're also selling off their GeoMagic software platform for $123 million, which they expect to close soon. That will actually put them in a net cash positive position, so they'll have some extra money to play with.
Wow, okay, so they're raising cash or cutting costs. This is a big restructuring effort.
Yeah, they're also cutting their real estate footprint in half. They expect to get more efficient with their manufacturing, and they're looking at consolidating their procurement to save over $20 million annually. And they're even reviewing their back office functions to see where they can streamline even more.
Okay, they're leaving no stone unturned, that's for sure.
So looking ahead to 2025, they're projecting revenue to be between $420 million and $435 million, which they say is basically flat to slightly up year over year after you take out the revenue from the GeoMagic business, which they're selling.
Okay, so a cautious outlook for 2025, but it sounds like they're focusing on organic growth, which is a good sign.
Yeah, they're projecting non-GAAP gross profit margin to be in the 37% to 39% range, and non-GAAP operating expenses to be between $200 million and $220 million. And most importantly, they expect their adjusted EBITDA to improve each quarter, reaching break even or better by the fourth quarter of 2025. So that's a key metric to watch.
Yeah, if they can hit that EBITDA break even target by the end of the year, that would definitely be a big win.
Now, in the shorter term, they're expecting revenue to be pretty flat in Q1 2025, with modest increases in Q2 and Q3, and the biggest jump in Q4 as those new products start to really sell. But they did warn that there could be some short-term volatility in their dental orthodontics consumable sales as their customers work through their current inventory.
Okay, so some potential bumps in the road, but hopefully those new products can drive some good growth later in the year.
Yeah, that's the plan now. In terms of the industrial market, they saw a nice increase in printer sales in Q4, especially in those high reliability areas like space and satellites and even some luxury automotive. But they also said that the whole tariff situation and the global economic uncertainty is making some of their bigger industrial customers hesitant to spend big money right now.
Right, well, that makes sense. Nobody wants to make a big investment when the future is so uncertain.
And that being said, they did say that overall capacity utilization among their existing industrial customers is going up, which could be a good sign for future demand down the road.
Yeah, if companies are using their existing equipment more and more, that usually means they'll need to buy more eventually.
And lastly, their dental market timeline. So while they're strong in aligners right now, they expect the big revenue from dentures to really start rolling in 2026 in the US. And then in Europe, they're hoping to get regulatory approval for prolonged use of 3D printed dentures, which would double their market there. And they think Europe will follow the US trends by about a year. So a little bit of a lag, but still a big opportunity. And they also see good potential in the near term for night guards and maybe even expanding into sleep apnea applications down the line.
Okay, so lots of moving parts in the dental market, but it seems like they've got a solid plan to capitalize on these different areas.
Yeah, they're playing the long game for sure.
All right, so let's have some fun now. What's your crazy trade idea for this week?
Yeah. Okay, so this is not financial advice, but here's a thought. Given how much that stock price dropped and how much they're talking about cost savings and the huge potential in the dental market, particularly with dentures, here's a wild idea. What if we buy DDD, but we pair that with keeping a really close eye on all the news and the social media buzz around those anti-aging and longevity technologies, like the stuff that's trying to reverse aging?
Okay, that's an interesting angle. I'm not sure I follow.
So think about it. If those fields start making some serious breakthroughs and people are living longer and healthier lives, wouldn't you expect them to want to look and feel younger too? And that includes their teeth. So maybe that could lead to a surge in demand for cosmetic dentistry, including 3D printed dentures. And if that happens, DDD would be in a prime position to benefit.
Okay, yeah, I see where you're going with this. It's like a bet on a bet.
Exactly. It's a total long shot. But hey, you never know.
True. You never know.
So that wraps up our deep dive into the 3D Systems Q4 2024 earnings call. We covered a lot of ground there, their financials, their strategy, their outlook, and even a little bit of speculation for the future.
Yeah, it was a roller coaster of an earnings call, that's for sure.
It's definitely mixed signals, but there's some potential there.
Yeah, the dental market is really interesting, and those cost-cutting measures could really pay off if they execute well.
Exactly. So what are your thoughts on all this? Do you think they're on the right track, or are you skeptical? We'd love to hear your take, so hit us up on social media.
Yeah, and remember, everyone, this is just our analysis. It's not financial advice. Do your own research before you invest in anything.
Absolutely. Thanks for tuning in to TalkTickers, and we'll be back next time with another earnings call breakdown.
See you then.
Bye, everybody.